What's going on, family, and welcome back to another video. And today I'm going to be giving you guys what you want. I asked you guys if you wanted the 1 hour session that I did with the VIP members on my entries and my exits, and basically how I get into the market, my whole system when it comes to getting in and out of trades, and also my management plan, all the good stuff when it comes to actually being in a trade, actually being able to get into the position of winning a trade, get into the position of even getting into a trade to win or lose in the first place. Now, there is a catch. You won't be seeing the screen, but you will hear all the value and you will see the behind the scenes, because if you want the real value, you got to join VIP. But I'm still going to give you guys that free game because that's what you're here for, right? That's why you're on the channel, for that free game, because it's YouTube. So you're going to get it. Part 2 is going to be uploaded tomorrow. How do you get your chart separated like into days? So this is one thing I'll definitely say is key, because as you guys know, you want to keep things simple. I can easily look at the chart. You guys can look at my chart. You can see where the daily high is, right? You can see where the daily low is. Like, it doesn't take someone smart. You can just go, oh yeah, that's the highest point. That's the lowest point. That's the highest point. That's the lowest point. That's the highest point. That's the highest point. That's the lowest point. It doesn't take like a kindergartner, right? And there's a reason I like that, is because you can see the days. You don't have to, like, if I were to get rid of it, like say for example, just like this, it makes it look very more just there. It's not as structured, it's not as organized. But when you slowly start doing things like this, to where you can structure, okay, I can see the days. This was Monday, that was Wednesday, that was Thursday. It makes things very more structured. And when you do things like marking up the previous day's highs and lows, having this daily high and low makes it so much easier. Because if I didn't have that and I'm like, where's the daily high and low? You don't really know, because you have to look at the times and then, this is the lowest point within that day. I just don't like going through that extra work. I like having this. And all that is if you just go to indicators and look up ICT New York Open, Midnight Open and Divider, just like this. This one exactly right here. That's what will come up. And then the settings I have for it, just make sure you got them just like this. But as long as you have it at midnight, you don't even have to have the indicator. What I used to do before that, I would just do just like this. I would go to the bottom of the chart. I'll look for 00, which is midnight. And I'll just draw a line. Like, you don't have to do it. This is the indicator, just makes it easier so I don't have to do it every single morning. But you definitely don't like need the indicator, but I would recommend it just because it takes a lot of the hassle away from when you come onto the charts. Everything's already here. You know what you're looking for. It's very straightforward. It's there. You want to keep the system and process so simple to where you don't allow your emotions to get involved. That's the key thing. You want to have a process. I always tell everyone, have a processing system. You may hear that and be like, yeah, I have a processing system, but do you know why you need the processing system? The processing system is going to allow you to come to the charts and do the same thing regardless how you feel. Regardless if you're having a good day, regardless if you're having a bad day, all you're going to be doing is following step 1, step 2, step 3. Regardless if I wake up and I have a headache, I'm still going to mark up the previous day's highs. I'm still going to mark up my higher time frame fair value gaps. It's the same thing. But if you don't have that process to where you're coming to the charts and doing the same exact thing, there's going to be days to where you come to the charts, you're like, damn, I don't know what I'm looking at. You're going to come to the charts and, I'm not really sure what to expect today. I'm not really sure what to do. Something doesn't feel right. It's because you don't have that process. When you don't have that process and you do the same exact thing every single time, you're going to think you're going to get different results every time. But if you do the same thing, you expect the same result. You're either going to win what you risked or lose what you risked. There's no unpredictability with it. You're doing the same thing, expecting the same results, versus doing different things, expecting the same result. You're not going to get it. And all it's going to do is bring those emotions in that are going to indirectly just cook you. Can you go back to screenshot the settings? Yeah, I got you right now. These right here. Just make sure it's at midnight. That's the main thing. Midnight EST, that's just the main thing. Because sometimes indicator be a little bit wrong. Like, you may have it as one thing. But make sure it is, when you go to it and check the bottom, just make sure it's at 000, because that's going to be midnight. And yes, some people may say the market closed at 5 p.m. Why are you doing it? Yes, but I also want you guys to realize that every day at 12 a.m., look at how the volume dies off and then resets. See how price consolidates into the Asian session? Midnight happens and we start getting a little bit of volume and we start moving again. There's a reason behind that, though. The market is built on an algorithm, and for the people that aren't new, here, the market is 100% rigged. 1,000% rigged. If it wasn't rigged, people wouldn't be able to consistently make money. If it was really random, people wouldn't be able to predict shit before it happens. It's just not true. Don't let anybody tell you the market's random. You doesn't really know what's gonna happen. If that was true, a 21-year-old like me wouldn't be able to fucking predict moves sometimes. Even if I could do it one time, that just shows something that repeatedly happens. Because if it can happen one time, it can happen twice. If it can happen twice, it can happen 4 times. It can happen 4 times, 8 times. and it just keeps going. You know why? Because the market is doing the same things over and over and over. It's not people buying and selling all day. There's robots, there's algorithms behind it doing the same things that are programmed to do the same things. And if it's programmed to do the same thing, it's like that analogy. If Bigfoot was real, don't y'all think that we would have seen his footprints by now? Success and things like that leave footprints. And it's the same thing with trading. Big money, big banks, they can't just move the market without leaving certain like footprints behind that essentially show that they did that. And those footprints are what we follow. Those footprints are the big moves above old highs, lows that give those false breaks. I'm gonna look for a fair value gap play now to give a good understanding. But also the same thing, those fair value gap moves where price trades into a fair value gap move, it's just, it's not random. That's just how the market is. Price does what it's supposed to do at the times that it's supposed to do it. Everything is very structured. Nothing is random in this market. Nothing at all. I'm gonna go to a higher time frame because higher time frames tend to have those better like fair value gap moves. Let me see. Right in, I'm trying to find good examples because one thing I always tell you guys, you're gonna find multiple examples. I could find examples of multiple fair value gap moves, multiple different trade ideas, but I want to find somewhere you can easily see it, something that you can take and be like, okay, I can use that. I can actually take that and see how you worked with that. Let me see, but the last few weeks have been kind of choppy. Let me check 30. False breaks, in my opinion, I get those moves way more than fair value gap fills. Fair value gap fills, yeah, I get those moves, but false breaks are happening on every time frame, every single day. Every single day, old high or low is gonna get ran. Damn, the last couple of weeks have been slow as fuck. Yeah, I'll just have to find this higher time frame one. But this is back testing for you. Like I told you guys, everything you want to know about the charts is here. You just have to go back and be diligent enough to actually do the fucking research. Actually go back in time to see what was happening, to see where you could have went right, where you could have went wrong, all these different things. Is this tapped into it? Okay. Here's a little idea. So when it comes to fair value gaps are left when price has big bodied candles. Why is fair value gaps being left behind when we have big body candles? Because that's liquidity. When price is going straight one direction, it doesn't really give any pullback. What goes up has to come down. If price has a big push high, more than likely there's gonna have to at least be some sort of push down to retrace to keep going higher. It's just how life is. Nothing goes up without coming down. Nothing is straight one direction. So when price has big moves, let's say price was dropping. Let's just say price had a big move and ended up dropping really far. When it dropped really far, price ends up leaving gaps. So what do we know? Price can maybe come a little bit higher before dropping, go lower, right? Or it can come all the way to the gap that we may be looking at and then drop lower. It could come half. The main thing is having that higher time frame area. This area doesn't matter. This area down here doesn't matter. The only area that matters is the one that you're going to be taking the trade off of, the one that you are actually analyzing. So in this case, maybe this was the gap that was formed. Price came back up, retraced into it, and that's where you're able to get your short. Vice versa, if this was the opposite, maybe price was having a big bullish run, price had a push, price retraced, kept going higher. More than a lot of the time, it retraces into a gap of some sort. It's just about being aware of it. Now, let's see how this actually looks in the actual candles itself, because actually seeing it with this, anybody could draw this, right? And I can say, yeah, this is how I trade right here, and you'll look at me like I'm fucking stupid. But if I show you the actual example now, look, price had a big push down. What goes up has to come down. We don't know when it's gonna come up or go down, but we just gotta wait. Wait for what? Our ideal time. That's it. I come to the charts at the same time every day. I'm gonna come here. If there's a trade for me, I'm gonna get it. If there's not, then there's nothing to get. I just come at the same times every day. It makes everything very simple. And what time did this happen right here? This move that ended up happening, that traded back into this false break, not false break, this fair value gap. This fair value gap right here, mind you, this is on the 4-hour time frame. So this is a higher time frame. It's very simple. Remember, I told you guys, keep it simple. If you look left, the only gap I see within price where we are right now is right there. Where's the second one? The second one I see is right up here, right? But that doesn't matter because I'm paying attention to where we currently are right now. And if I were to be trading at that time, this is where we would have been at. Now, in this case, I'm pretty sure, I don't know what time this happened. This happened within the 6 o'clock 4-hour candle. But that could have been at 6, that could have been at 7, could have been at 8, could have been at 9. If this happened at 9:30, That right there is beautiful. At 9:30, if we potentially had, I'll go check it when we go a little while on the charts. But say, for example, right here, this is the fair value gap move. Exactly like this. Price had a drop, eventually started retracement. But the reason I don't like to look for the retracement is because you never know when it's going to retrace. You never know when it's going to stop falling. You never know. Like, you really don't. All you can do is go based off of probabilities. Now, if price may be traded into a old higher low at this time, maybe traded into a fair value gap, maybe you could have seen why it was going to go up. But in this case, I wouldn't have been able to predict that it was just going to retrace here. I would have had way better luck waiting for it to retrace as it did to get into this area that I was already waiting for. Why would have I went short? Remember how I told you guys, how do you see the ideal trend? How do you figure out the trend for today? You're never going to be 100%, but if you look at the previous day and see that it was bullish, the chance of today being bullish is more likely. If you see that yesterday was bearish, in this case, if we look at the last day, that's just clearly bearish. So if we just take that into consideration, that we're clearly bearish, at 9:30, we're trading into a higher time frame fair value gap that's already bearish in the trend, maybe this should be something that I take my risk on. And okay, let's say I was wrong, right? Let's say this trade didn't play out and it went to this next area here. Okay, then this is where I would take the next trade. Why? Because this will also be a run of this short-term high and tap into this gap. And as long as it's within my time frame, that's cool. And if that would have been an L, that just would have been it. That just would have been my day. I took my 2 possible opportunities. I took my 2 chances. I took my 2 trades, my 2 shots. If they win, they win. If they lose, they lose. That's really it. You just come and you implement the same system every single day. Now, how would have I taken advantage of this trade? Now, me personally, I told you guys, I don't wait for like the perfect entry. I just wait for where it makes sense. Now, me, I'm not going to wait for it to come all the way up to this gap first. If I see that it's trading within that first gap at the right time, I'm just going to hop in at where the gap is. Because I don't know, it could tap that gap and immediately fall lower. It could have tapped this gap and then still flew a little bit higher before coming lower. But I can only do what I'm going to do. I can only take my chance. Now, on this is 30. I told you guys I usually risk about 50 points on 30. In this case, if I would have got in at that high, this trade actually would have been able to play out. If I would have got in at that 4-hour gap, at that 9:30, with a 50-point stop loss, that would have been good. If it wouldn't stop me out, then I would have simply looked for the one up there. But in this case, for the basics of this example, it didn't stop me out. Where would I have targeted? I could have targeted the previous day's low. But in reality, if you guys always want to know where to get out or where to get in on a trade, same ways you got in. Entries are exits. That's really it. The same way I would get into a market, literally use that same way to get out. If I'm getting in at a fair value gap, you can get out at a fair value gap. If you're getting in at an old high, you can get out at an old high. But one thing you can always do, like if you're still not sure, like maybe a previous high is a couple points away, you don't know if you should hold it. Maybe you're a couple points away from a fair value gap, but you don't know if you should hold it. Always go based off of what you're risking. That's something that you will never go wrong in. If you're up $100 and if you're risking $100, you're up 200, but you're not sure if you should close it, just close it because you know you're up what you risked. If you know you're risking $1,000 and you're up only 1,000, maybe you shouldn't close it yet because it's still early in the trade. But if you're up $1,000 risking 500, maybe you should close it because you're up 2 times what you risk. A lot of the time, I'm going to go based off of what I'm risking. If I'm up 2,000 when I'm risking 1,000, basically I'm up a 1 to 2, but my target hasn't got hit yet, I may just close the trade because regardless, I'm securing. You a lot of times just got to take what the market gives you because you never know if you're going to get the target. There's a lot of times where price can come mad close to a target, mad close to an entry, and it'll miss it by a couple points. It happens. But in this case specifically, if I just would have been looking for my 1 to 2, 1 to 3, I would have been out of this trade literally within the wick. Just within that wick. I could have been sick that price ended up doing some shit like this and dying off to possibly give me a 1 to 17, but it's not about that. You guys got to understand, you don't need to catch these big ass trades. It's going to be cool. It's fun to happen, but it's just something that gradually happens over time. There's no point of aiming to catch these moves. I want you to aim to catch moves in general because there's going to be times where you, just from you catching this move that you would have caught any other day, it could then end up leading into a move like this. That can end up leading, like, look at how this ended up keep going. From that one area, it keeps going from there. I'm pretty sure we kept going from here. Look, just from that specific area, price is still dropping. And that's not me, like, if I would have been able to take that trade, I wouldn't have expected, oh, this is going to be the best entry for the next couple of weeks, maybe for the next couple of months. No. All you do is follow your process. You can't control the result. If you would have caught this trade and held it and this is what happened, That's the result of you following the process, not you trying to catch big trades. The big trades are a result of you following the process. Winning trades are a result of you following the process. Making money is a result of you following the process. Losing money is also a result of following the process. You just got to make sure that it's all managed. That's the main thing. Being able to manage your trades. And that's going to lead into our second little topic of the day. So we went over false breaks, fair value gap fills. That's exactly how I get in. Now, if you want more details on it, the free course has all of that in depth, but I want to go talk into more of like trade management now, like the management side of it. So when it comes to trade management, this is equally as important as actually getting in the trade, if not more important. You got to understand a few main things. You got to understand where you're going to break even. You got to understand where your targets are and how much you're risking. Every single trade, this is something you got to know before you get into the trade. Before you get into the trade, I would say this, how much you're risking is in terms of understanding your stop loss also. But when you're looking at manage trades, these are all things that you need to know ahead of time. You need to know this going into the trade. You need to know where you got to, before you take that trade, you got to know where you're going to be breaking even. Me personally, when do I break even? You guys don't have to take this rule, but I break even at 1 to 1. I think that's a great rule. Personally, I think it's a great rule. Some people like to break even at 1 to 2, 1 to 1.5. Me personally, if I'm up $1,000 and I'm risking 1,000, I'm not gonna risk a chance of losing 1,000 after being up 1,000, because I would have lost the trade if I was down 1,000. So me personally, that's why I risk free. If I know I'm gonna lose a trade, risking a certain amount, once I'm up that certain amount, I'm gonna secure the fact that I'm not gonna lose no more. That's just me. That's just me. Other people, you may look for a higher target. That's perfectly fine. But in my opinion, I like this because it keeps you out of trades that aren't going to go your way. And it also takes the emotion away from it early on. If you can get a 1-to-1 hit, my head mentally is, this is a winning day. This is a winning trade. Even if I don't get my target, it's a winning trade because I got the reaction I wanted. You also got to know where your targets are going to be. Now, my targets, I use the same thing I use to get into trades, or the same things I use to get out. I'm gonna use previous highs, previous lows as targets, A's in session highs, A's in session lows, higher time frame for value gaps. The same way I would get into a trade is the same way I would get out. Why? Because the only reason I'm getting in or out of a trade is because I'm expecting a reaction. That's it. I don't know if it's gonna be a crazy reaction. I don't know if it's gonna be a small reaction, but I know there's likely going to be a reaction. Now, I don't want that reaction to be the reason I possibly lose a trade. So that's why I end up getting out at the same areas I get in. But as I was telling you guys, if you want something that you could do every single time, because you might not get that target hit every time, but if you're up a 1 to 2, if you're up a 1 to 3, those are two areas where, in my opinion, if you're not taking it off there or taking something off there, you deserve to lose the trade, or you deserve that what's going to happen, because you got to learn. You're going to have to learn from it. If you're up a 1 to 3, 1 to 4, and not break even, you're going to have to learn. If you're up a 1 to 5, 1 to 6, you're not taking no partials, you're not taking that trade-off, you're going to have to learn. You're going to have to learn the environments where you're pushing for too much. You're going to have to learn the environments where you're not patient enough to wait long enough. But that just comes with experience. Every single trade you take, you can take it off at a 1 to 2, 1 to 3 if it wins. You're never going to be able to guarantee a result. All you can do is take off what you have, is take what you got. That's all you can do. When I'm up a 1 to 1 or 1 to 2, I don't know if it's going to go to TP3 or TP4. It can 100% reverse. But I just got to do what makes sense for me, my account, and my system. And then how much you're risking. Every single trade, this is something a lot of people don't do. They don't know how much they risk per trade. They just put random contracts, they put random lot sizes, they put random stop loss placements, and they're not calculating it. And that's not good, because if you don't know how much you're risking, the difference from being able to take 10 trades and blowing your account and one trade is understanding how much you're risking. You could be doing the same exact thing, but if one trade is 10 times bigger, you could literally blow the account in one day. Just from the lack of knowledge of understanding how you should be able to have a stop loss, how you calculate contracts, how you calculate lot sizes. People don't realize that, and that's something that is very crazy, because it's something that I learned early on. But everyone learns differently. That's why YouTube University is it can be tricky, because you'll probably learn different things at different stages versus other people learned them earlier or later. It's just very tricky, but you got to know how much you're risking. Before you get into every trade, you need to know these three things: where you're going to break even, where are your targets, and how much you're risking. If you know all of those things, you know what the result's going to be. Like, there's not a result that can happen that you're not aware of. You could lose the next 5 trades, but you'll know how much you'll lose. You could lose the next 1 trade. You could win the next 2 trades, and you know how much you'll be able to minimally make. not maximum, like, but if I say I'm gonna win the next two trades and I know I risk 250, I know I can guarantee that if I win the next two trades, I'm probably gonna make at least 1,000, just because that's my minimum rules. You know what I mean? Everything is predictable. Everything is structured. Everything that I do makes sense. Everything I do is planned ahead, is planned accordingly, so that if something happens like a loss, I don't get in my feelings because I just know it's part of the game. Versus if you're expecting to win, if you're putting all these high expectations on a trade idea, you're like, yeah, this is gonna fly, this is gonna go to the moon, and it doesn't, you're gonna be feeling like shit. All from that, just putting that expectation on it. It's crazy what your mind would do to you. It's crazy. But y'all got any questions about this risk management? About the entries? I feel like I've been spitting game for 50 minutes. What's up? People need to like focus on like that high probability. It's having something that's works for you and that's constant too. If you want to have an edge that's not gonna have to change in a month or two, because that's not really sustainable. You want to have things that are constantly doing the same thing, constantly having the same move, so it can constantly give you that result, or at least, because all the edge is doing is like giving you that like, in my opinion, when I think of edge, it's like what really brings you from like a 50-50 trader, like a break-even trader, to slowly winning more than what you're losing. I say that's what the edge does. It keeps you winning more of the trades than losing a lot of the time. And people without the edge, they'll just be win, lose, and they're just kind of in the same spot, not really going nowhere. But that edge that you're talking about, without it, is you're just kind of either a losing trader, break-even trader. But once you get that edge, it will constantly make it so that you're winning a little bit more than you're losing. Now it's up to you. Now it's up to you how big are those wins, how big are those losses. You know what I mean? Because then, like, what's up? It's like that intuition. It comes with experience. Most people don't like. That's why I always tell people you got to do the same thing. Because if you're constantly trying different systems, trying different strategies, that intuition isn't always going to be the same. You'll have intuition from something totally different. You get what I'm saying? But if you're doing that same thing, you're building experience, looking at the same thing, doing the same things, that intuition is going to be built off of your system now. But if you're constantly going from strategy to strategy, system to system, different pair to different pair, that intuition is not going to be as beneficial no more. Because it's going to be intuition from so many different things that it's not really going to necessarily be beneficial. But if you're doing the same thing, same system, getting experience on that one thing, you're only going to build. It's like the same thing I'll be telling people. They be like, oh, how can I make $10,000 a month? What's the best way to make money? What's the best way to get rich? You can get rich doing anything. It's what you're going to make work. You can make any system work. You can make any strategy work. Which one are you going to make work? Which one are you going to stick with when you're losing? Which one are you going to stick with when you have no money? When you're losing trades? When you have no hope? That's what's really going to, because once you get to those points where you're losing and losing and losing, guess what you're going to do? Switch system. Switch strategy. The whole time it wasn't the system of strategy, it was you. And that's what people, they kind of get in that effect of keep doing that same thing, different strategy, different system, different broker, different prop firm, until the point to where they either run out of money, run out of mental capital, and just end up falling off. Most people that have succeeded in trading were the people that they eventually, they went from different strategies, different systems and shit, but they eventually got to where they had one or two things and stuck with that. Wins or losses, they stuck with it to the point to where they made it work. Because you can, like I said, you can make any system or strategy work. It's about what you're gonna make work. What business are you gonna make work? You can make $10,000 a month doing anything. What are you gonna make work? Facts. It's facts. Most people don't have a journal. Like, journal is key because most people, there's so much going on. There's so many, like to the average trader, they're doing so many different things to where if you have that journal, it's going to be able to keep everything together. And you're going to forget. There's trades I forget. Like, I forget what my first trade last week was. And I only took three trading days. And I already forgot. Imagine a person taking 5 trades a day, 5 days a week, 20 days a month. You're going to forget things. It was like we were saying to Josh the other day. He didn't necessarily remember why he was losing trades. He didn't remember why certain things were happening. It's because he didn't have that journal. And a journal doesn't need to be anything crazy. Your journal could literally just be a notebook where you're writing in it. But if you're writing in it the things that are happening, the important things that you actually need to know and be aware of, it's so beneficial. I would say the journal is probably the one thing that have been able to show me what's working and what's not working. Because I can go and back test it. But here, now you can talk. I'm about to show you something. You talk. Mm-hmm. Mm-hmm. It's like that intuition. It's like your brain is way more powerful than people ever really are aware of. Like our brain does shit without us even realizing it. We just think it's normal type shit. But what I was gonna show you is like this is my journal right here. This is one of the journals I did on my Aces session play. So there's a reason I have the Aces session marked up. I literally have right here. This is where I made a thing on Notion. I specifically went draw day of the week. So I was going in there. This is me back testing. I was making sure I was getting the day of the week. I was getting whether it ran the Asian session high or low or the previous is high or low. I was getting the point stop loss I would use. I have a screenshot of the trade and I had if it was a win or loss. And what was this doing? I was going back into the charts and back testing what is the likelihood of price using the Asian session high? What is the time that is going to use the Asian session high? When is it going to happen? How often does it happen? What days of the week is it likely to happen? And I did this for 6 months. I back tested 6 months. I don't know if it's 6 months, 140 days. How much is 140 days? 143 divided by 30. For about almost 4.5 months. 4.5 months of me back testing, only looking for one thing. Not every day there was a setup either. I put the days that had no setup. And these are things like, do you think I'm gonna remember this? Fuck no. You think I'm gonna remember this? If I couldn't go back and look at it and click my screenshot just like this to go look at what happened, I would not remember. If I couldn't just go all the way down here and see what days didn't have a setup, I could look. Maybe nothing happened here. And this is all these different things that you don't know until you have that journal. Come over here, look. Asian session move at 3 a.m. high. This still happens. Like, this is shit that, look, the same indicators I was using, Asian session, ICTO, I've used the same things. And it's get that data because you're going to forget until you know what you're doing right, what you're doing wrong, what's working, what's not working, how you're going to improve. And if you don't actually have it written down, how are you going to remember? It's crazy. Journaling is very key. Now, like we said, it doesn't even have to be anything crazy. Like Dyson said, he could just use a notebook. But it's about what you're actually journaling. It's about the what's going in there. What is important? What is in there that you're actually like benefiting from? You got to know yourself. But how y'all feeling about this session though? How y'all feeling? Let me know what y'all think about this overall entry exit. What questions you have, entries, exits. I feel like I'm going over a pretty good portion of it. A lot of it is very repetitive. Like, it's not complicated. It's about just understanding the few concepts itself and just, you know what I'm saying? Going deep on those. And everything I went over with you, you don't gotta believe me. Everything you wanna know is on the charts. You can go, everything I showed you, go back test it. Go into the charts, see how often it happens, see what times it happens. It's gonna tell you a lot more of how to actually be beneficial. Like, there's more that this chart will be able to teach you than I will be able to teach you about the chart. I could be able to teach you about the experience. I can teach you about the actual psychology, like what it's like for an actual person to go through it. But when it comes to the chart itself, the concepts, bro, the chart has everything. There's nothing I could tell you that the chart isn't already gonna show you. Only thing I could do is like point your eyes to what to actually pay attention to. That's it. That's the only thing I could do. I could bring you to the water, But I can make you drink that shit. You can be like, nah, that water dirty as fuck, and just walk away. I can't make you. You know what I'm saying? You may go find some new water. It's just everyone's on their own type shit. Just got to be able to understand that.